any idea about the financial intermediaries?
Banks, insurance.
Actually, you guys are correct. But before that, I will explain to you guys what actually financial intermediaries are. Basically, financial intermediaries, they do not really directly lend you the money, but it helps you to facilitate the money, like the borrowings. So, you guys, the examples you have given, they are correct. But I have some more examples of financial intermediaries, and they are bank, unit trust, life insurance, takaful, mutual fund, and so on. What you guys are doing? I'm talking to you guys. Since you guys already know the topic, come explain here.
Ma'am, actually we were talking about the development of all these financial intermediaries, how they are developed, about that.
I was going to discuss about this topic just now, but since you guys already know, can you please explain?
Actually, ma'am, the Malaysian government has established the development of financial intermediaries to develop and promote the key sectors that are considered to develop the socio-economic development objectives of this country. And all these key sectors include agriculture, small medium enterprise SMEs, also can be infrastructure, export-oriented sector, as well as capital intensive and high technology departments.
And what about you?
Ma'am, basically, DFIs is actually kind of strategic channel which bridge the gap between the supply of financial products to the identified strategic areas. And for this one, they are specialized in provision of medium or long-term financing projects that may carry higher risk. So this is because of achieving long-term economic development.
So class, who regulates and supervises these DFIs?
Bank Negara Malaysia.
Here we can see the amount of all the banks in Malaysia. The total asset value of 27 commercial banks is approximately 2,538.75 billion. For 15 Islamic banks, it is about 271.58 billion. And for 11 investment banks, value of total asset is almost 69.25 billion. So, from the pie chart, it can be seen from 100% value of total asset, commercial banks contain 88.10%, Islamic banks contain 9.43%, and investment banks contain 2.41%. Here is another chart which shows the gradual expansion of total asset of the commercial banks in Malaysia within 1 year.
The transformation of Malaysian financial system has been guided by the implementation of the Financial Sector Master Plan FSMP, introduced in 2001. The FSMP outlined a 10-year master plan for the orderly development of the financial sector, beginning with the building the institutional capacity of the domestic intermediaries and developing the domestic financial infrastructure. Till 2010, Malaysia has witnessed a huge improvement in the financial system during the FSMP ongoing implementation stage, and another decade till 2020, Malaysia will witness the development stage. Since 2001, the financial sector has expanded at an annual average rate of 7.3% to account for 11.7% of real GDP in 2010. 3 top priorities for FSMP. Number 1. Strengthening the resilience of financial institutions. Number 2. Establishing the domestic financial infrastructure. Number 3. Enhancing Bank Negara Malaysia's financial stability framework. Point number 1 reflects that financial institutions underwent restructuring, consolidation and rationalization, which caused increased investment in technology and talent. Institutions having accumulated strong capital and improved risk management. If we see a comparison between 2000 and 2010, everything has improved compared to 2000 regarding capitalization, asset quality and profitability. The development of the debt securities market has contributed towards more diversified sources of long-term financing and has positioned Malaysia's debt securities market as the largest in Southeast Asia. The size of the debt securities market has expanded significantly from an outstanding value of ringgit 306.8 billion in 2001 to ringgit 867 billion or 105% of GDP in 2011. The FSMP is successful, showing a stronger global presence in domestic banking groups. We can see an increased overseas contribution in 2010 compared to 2002. In 2002, the total assets were ringgit 3.3 billion, where in 2010 the total assets were 240 billion. And in financial intermediaries market, within 2020, the financial market hopes that it will have a 20% banking industry, 53% of takaful and insurance companies, and 27% of other intermediaries. And if we see, in 2020, the share of Islamic finance in total domestic finance will grow further. It will grow 60% of conventional bank and the Islamic bank will be 40%. The graph shows that how immense the size of the financial system will be in 2020 compared to the year 2000.